Today, we're looking at signals that show up at lows for Bitcoin and cryptocurrencies, and it is signaling now. You might be wondering, how the hell is it signaling now when Bitcoin is trading at $68,000? Now, it's a very simple signal to follow. Anyone can use it. And when you see it, you'll wonder, why haven't we checked out this sooner? But first, you know the deal. Hit that like and subscribe. You're at your home of macro cycle analysis with me, Jason Pizzino. We're covering Bitcoin, cryptos, the stock markets, and the real estate cycle as well. Something for everyone in today's video. Plenty of headlines to get through that relate to the Bitcoin and cryptocurrency cycle. But first, a quick mention to our free crypto and economic report. Link is in the top of the video description, and I'll touch on these a little later in the video. So first, let's have a look at the traditional markets, cover the economy, the stock markets, the headlines, and then I want to get into these major signals for Bitcoin and cryptocurrencies. This one is super important, and you guys had mentioned in the comment section, if you've been following a while, if you are new, thanks for joining us here. This viewer left a fantastic comment looking at the stage of the cycle we are in, and this relates to the economy and the stock market as well, as I'll get to in a moment. The people that they've tried to convince to buy into Bitcoin, they've blown them off. They were somewhat interested in the spring, so essentially around the March top, but now they're like, nah, man. We're all in that final run up when people start to ask, how do I buy some? And we're not there yet. That's one part of the signal, but it also helps with the stock market itself. So the stock market as a leading economic indicator. Often we hear it the other way around, where people will say, this economic indicator XYZ appears to be warning of an economic slowdown. Therefore, we should expect the stock market to weaken. Sigh. It's pretty much the opposite. If you start to see the stock market going up, that's a leading economic indicator. Think about that for a moment. Pretty crazy when you actually look at the data. Now, I could spend the rest of the video going through all of this data here, but I'm sure that would only apply to 1% of people. So I'm going to skip down to the bottom with the results here. If you want to impress your friends with your ability to predict economic weakness, history suggests waiting for the S&P 500 index to show a 12-month loss before doing so. Note that doing so does not guarantee that you will be proven correct. However, but it does appear to improve your odds significantly. Likewise, and probably more importantly, so not trying to predict a crash all the time, history strongly suggests ignoring the dire warnings of impending recession or economic collapse while the stock market is performing well. And that's what we're seeing at the moment. We're seeing the stock market performing well. One day ago, not so good. 1% down. Day before, another percent down. But look at where we are in the grand scheme of everything going on. We're at all-time high prices. And so this was showing up at the lows where the stock market was beginning to lead everything. And that's exactly what we talked about on the channel. Highly suggest subscribing. Maybe you don't like me. Maybe you don't like my face. I don't know. But if we're just focusing on the charts here, that was a very strong signal to tell us that this market was getting ready to pump to new all-time highs, or at least test higher prices. And so that signal came up amidst all of the dire warnings of the banking crisis, of the debt ceiling crisis, that's what these dates are here, of another problem in the Middle East, of inflation fears, which is probably June, and then some other fears that came up in October, and look where we are, all the way up here. So our major theory here for the markets is that we're in a seasonal trading range after exploding for about 5 months. So we are within a macro bull market. So what we have to do is look for any sort of invalidations to this signal here, or at least our theory. And so we've got lines underneath the support levels, and of course our major 50% levels as well, back down at 47, which lines up with the previous old all-time high at 48. So there's a long way to go to the downside before we can invalidate this bull run. And we don't want to get offside of the bull run because the probability suggests that there's more upside. Here is the election year, the seasonal pattern. This is essentially where we are. We're in May and we're coming towards the end of this now. So this market has run up and it's just started to pull back towards the end of May. But as you can see with the green line, it's typically a correction top in a Q1. So we basically got that. This is an election year, is the green line, have a pullback, and then there's been 7 months of up. But within that 7 months, there's a pullback, there's a small pullback, there's another significant pullback, around 2% there, pullback, 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 but all the while higher lows at that stage. Now, it's not going to repeat exactly the same. You can see with the black line all election years, and that this is with the top in Q1. But overall, you can see that the market continues to go up throughout these particular years, and leading into the election in November, typically you'll get some sort of pullback, or in the case of the green line, it's basically a trading range again at higher levels. So that is something that we're going to continue to follow. So far, it's been working out very, very well. And as long as we're on the right side of the market and not trying to predict an economic collapse, impending recession over and over and over again, we're going to be on the right side of the market more often than not. So that leads us to the real estate cycle and some of the headlines that have been coming up around the election coming up with Biden as the current president, and obviously Trump trying to take that away. Biden's 10K tax credit, is it helpful or harmful to home buyers? This was on X. And as always, when things lead into these peaks of the cycle, you'll see more money getting thrown around. And it's what we've been talking about on the channel for years, especially at the lows of 2022, when the Fed stopped printing so much money, or stopped printing altogether. And the masses thought, how can the markets keep going up? One, the government can keep printing money, or the government can hand out money in the form of tax incentives, tax credits, money for whatever they want to give you money for. And two is the credit cycle. The banks can create credit. So it's still money getting flooded into the system, just like we are potentially seeing with, I believe it's Fannie Mae, that might be releasing some of that equity in people's homes. Once that equity is released, there's a lot of more money that people can get their hands on. And what do you think they're going to do? They're going, as long as the markets are still up, they're going to be excited by it, and they're going to be throwing the money into the markets. That's been the theory here on the channel since these lows. You can go back and check the videos out if you wish. Otherwise, you can continue to follow along on the journey here, hitting that like and subscribe button. Onto the headlines for Bitcoin and cryptocurrencies. New York Stock Exchange to collaborate with CoinDesk desk for potential crypto trading. So it hasn't happened yet. They're talking about this at the moment. And the reason I'm looking at headlines today, as opposed to other days, is the prices for Bitcoin and cryptos overall, for the strong cryptos and of course Bitcoin, they still remain elevated. We're still seeing good headlines coming out, and the prices aren't necessarily falling. In a bear market, you would see good news come out and prices fall. In a bull market, you'll see good news, prices pump harder, or we at least see a pause after such a strong move to the upside, which of course Bitcoin has experienced. It went from October to March, very long run, prices moved pretty significantly. So anyway, here are the headlines that are still coming through. There's still progress being made in the crypto land. American voters turn to crypto as Bitcoin becomes an election issue. Maybe we start to see this pump as a part of the next narrative for Bitcoin and crypto, some sort of political pump, a Trump pump. I don't know. I'm trying to make up different marketing terms here. You guys help me out in the comments section. Next headlines, MasterCard's crypto credential goes live to simplify sending Bitcoin. Essentially, they're looking to create a name for the user, and then you can send Bitcoin over MasterCard with your name, sending it to other usernames, making it a lot easier than using a Bitcoin address, which is very similar to ENS, but this is the decentralized version. So this is Ethereum naming service, and you just have your name.box domains or your name.eth, which would be your Web3 username, obviously being decentralized, whereas this is going to be centralized. That leads us on to Ethereum news. Ethereum ETF June launch, legit possibility. So again, it's still all speculation, but we've got something hard to work with here. BlackRock updated its Form S1 for its spot Ether ETF, which analysts say is a good sign that issuers and SEC are working on ETF launches. So potentially happening. Who knows? I don't know any more than what this headline says, and I doubt anyone else does besides the people that are actually doing the work on this this filing of the S1. Okay, Singapore. Also, largest bank DBS is an Ether whale with nearly 650 million. So now these headlines start to come out once we hear more about ETH and the ETF coming through. And of course, PayPal's new stablecoin on Solana will offer confidential transfers. Essentially, what I can make of this is that it is basically like cash transfers. If you send cash to someone or you receive cash from someone else, money, you don't know how much they have in their account. So it's a confidential transfer. Whereas with the blockchain, well, you can see everything that's in someone else's account by grabbing their address that was sent, the money that was sent to you, and then going onto Etherscan or a Bitcoin blockchain, and then checking how much is in their account. If you didn't know that already, you can definitely go and do that. So the news headlines for Bitcoin, for crypto, for ETH are all still looking relatively healthy. But the main thing that we want to focus on, of course, is the chart and what the hell is going on at the moment. I have taken the time to label up areas on the price chart with what was going on at the time. And we can start back with the ETF. And this is going to lead us to understanding how this signal occurs, the signal that occurs at the lows, and how the masses miss the signal every single time. And it has to happen that way. Otherwise, we wouldn't get the cycles the way we do. If everyone became aware of the cycle, that's everyone, then maybe we would do something else around how speculation works in the market. But for now, the majority don't seem to be that interested, and I don't see it changing in my lifetime and probably your lifetime either. So we've got nothing to worry about there with people becoming aware of cycles and patterns in markets. Bitcoin ETF top, Bitcoin ETF correction low. So from 49K down to 38K, big run up. And this is the area that we're going to pay attention to with the normies getting into the market here. Peak Bitcoin euphoria, obviously at the top. Peak Bitcoin complacency. You can see when we had that correction and the bounce up, there were quite a few people calling for this being the low for Bitcoin. It obviously wasn't the price low. We went lower, but they were looking for prices to bounce very, very hard, very, very quickly to 80K, 100K. That was all the hype at that time there in late March. So I've labeled that here as the complacency. We had the altcoin higher low. So after a few weeks here, we finally got a dump down. Bitcoin dumped, and altcoins for the strong ones have put in higher lows around that period if they were still in sync with this particular cycle moving up. And then we had the Bitcoin low here in May. Other altcoins put in higher lows again at that point. And then this period has been very, very quiet. You might have noticed it for yourself, as some of the viewers have seen, like Conrad here, talking about how this will get crazy really fast. But for now, trying to talk to anyone about it, no one wants to know. No one's asking, how do I buy crypto? How do I buy Bitcoin? So we're likely still in a period where we're setting up for another move to the upside. So let's come back to this particular chart here. And our theory was that after the signal from the top, after this huge euphoria, and we had the 3 days down, that there was going to be a lot longer amount of days or time underneath that all-time high based on that signal that came in at the all-time high. The all-time high happened, and then 1, 2, 3 days down, that was a major, major signal there. So on this complacency bounce, I was still talking about it on the channel, but you might remember that a lot of people were so against it, that the thought that this market was not going to go any higher anytime soon, and the hate got pretty heavy. And so that to me was a pretty big signal that, look, even though it could go a little higher, it probably wasn't the time that we were going to see this next big move to 100,000 or 150,000 or 500,000, like Kathy Wood was talking about right here. That was all the headlines at the time. And so that helped again. It happened again. And the amount of dislikes that come up on the videos really showed that where we were in the cycle. So we're here now at basically the same price as where the euphoria came in, but it's crickets. It's crickets in the market. And this is showing up the crickets. You can see on the average true range. We looked at this recently in another video for another reason, but here I want to show you the stealth patterns using the average true range. Very, very simple. You can use it for Bitcoin. You can use it for cryptocurrency. You can use it in the stock markets. It's just an average true range. And what happens at the lows is the range of the bars, whether it's daily, weekly, monthly, the range of the bars gets smaller because there is less interest in the market. And the stealth move, as I'll show with the low, is you start to see higher lows, typically higher lows. You might see slightly lower lows like you could see right here, but then the closes are higher, so it's a good sign. And the range of the bars continue to fall. That's what this red line is here. It's telling you that these daily moves are much, much smaller than what you had seen in the past. And typically when you get big ranging bars, it's around tops. And we got that again, leading into another top. Now, these moves can go further than most would anticipate or most would expect. So it's always important to keep that in mind, watching, following the market along. And that's why we use the swing indicator and our 50% tools to help us stay on the right side of the market as often as possible. But just this massive stealth move happened at the low, the 15K low. And you guys have been here on the channel mentioning your comments, especially to new people who are joining on the channel. So that's another reason to hit the like and subscribe. That was a time that we don't know for sure that it was going to be the low. We don't know for sure that the banking crisis is going to be the exact low, but it seemed like it had very, very strong possibilities of that being a low. And at the moment, well, we're seeing the average true range. Well, at the time, we were seeing the average true range drop off. Yeah, picked up a little bit, but you saw the higher lows coming in before it started to pick up. And then it started to pick up. It didn't break that top until that move out of that was the banking crisis low. So how does that relate to today? Well, at the moment, we're definitely seeing the average true range drop off. Could it go further? Probably. And I'm looking at this going lower because there hasn't been any confirmation that it's ready to bottom and then turn around. And you'll start to see that afterwards. Like you see with these lows, it could keep going, and then all of a sudden you start to see it pick up. But it's usually near the low of the move that it picks up. And so you start to get a little bit of a signal. Now you could get a false signal and it pick up, but of course, depends on which direction the market is going. But at the moment, we're sitting around that sort of $2,200 daily average bar. And just looking at a bit of support and resistance here, you can see that the normal area is roughly around that sort of 1500, or the support and resistance is around 1500. So I'd be looking anywhere from about 1500 to about 2000 for some sort of support to come in on the average range of the bar. If we go lower, maybe we do, who knows for sure, but I'm looking at that area as a possible support for the price to then start to pick up and head to new fresh highs. So if we did get into that zone of 1,500 to 2 grand per day, and Bitcoin was still putting in roughly higher lows or maintaining that sort of 56 to 60K level, that might be a sign that we're getting ready to turn around and head higher. In terms of timing, Bitcoin is 79 days underneath the all-time high. Let's take a look back at some other areas where the stealth move has occurred before the normies get in, and how much time that has taken. We've got about an 84-day move. That was after that first pump out of the COVID low, but that entire COVID move was the longest one yet, so about 22 days. And I'm measuring that from the low to basically that breakout day there, where you could start to see the average true range turn up. But more importantly, that was a breakout day of the tops. So you can see the tops here at about 12K. It broke out and then basically skyrocketed from that point with the range and the normies beginning to enter. So the stealth move, higher lows, higher lows, higher lows, the range, lower lows, lower lows, lower lows. So the supply is getting absorbed and people are still selling into that, which is causing the bars to be quite small. So you're getting more sell pressure, more buy pressure, keeping those daily ranges quite small. Whereas something like a COVID collapse, you're getting a huge dump, a lot of people selling all at once, and then just the smart money coming in and buying up at those lows. Another stealth move at the previous cycle low. Note how these things are showing up at very, very significant lows. You've got about 116 days from this move where the average true range turned down to that low, and then the breakout day. So again, coming up to about 4 months. Lower lows, lower lows, lower lows on the average true range, and then the breakout here. As always, I could be here all day with you going through every single example. You can take my word for it, or more importantly, I would go and do the work for myself so that you can prove this to yourself, so that you feel more confident in knowing when to buy and when to sell, not listening to some person on the internet, no matter who it is. If you do the work, you're going to be confident in your own decisions and how you trade and invest. Here's the last one here that I'll show you. Average true range, down, down, down. You can see the consolidation happening, higher lows beginning to form. You get the breakout, another higher low, and then eventually market takes off from that point. So it doesn't look like we're at that stage yet, bottoming for the average true range, but we're so far seeing prices high, and their prices could come down. It could come to 65 where the previous support is. Maybe it comes down to 60. Maybe it comes and tests the 50K or 56K level again. The main point is that you want to start to see stability in the price and the range, the average true range, continue to fall. That is the big signal here. Now that was Bitcoin, but I want to show you the stealth move on the total cryptocurrency market cap, excluding Bitcoin and ETH. So this is for all of the altcoins. Now you could say that it's similar to the death of crypto, because essentially things die out, and that is right there, the death. It's just the mindset, the market sentiment showing signs of dying out here, which to me is more of a stealth move. If you take this off, you can see higher lows so far. Even if this drops back down, you're still going to get higher lows. And we've looked at this fractal before. It's still sitting quite pretty to this fractal at the moment. The average true range is dying off and potentially getting another stealth move happening. We saw a stealth move earlier in the year, January, another stealth move at the low. You can see there, average true range dropping off, higher lows forming, then the big breakout. Kind of a little stealth move here. It was a lower low in price and lower lows in the true range, but then you finally get that move up. But again, it wasn't the end of the move. And over here in the previous cycle, you've got more stealth moves in the price heading higher, yet the average true range was lower and lower and lower there. So you can see that you've got this quiet time in the market where the majority aren't there, the normies aren't there buying up. They typically buy at those peaks. They get super excited, which pumps up the average true range, which then warns you that things are probably getting a little bit hot and heavy. But stay with the market, use your Gann swing indicator to stay on the right side of the trend until the end. So the market can go one of two ways, up or down. If it breaks down, we get an invalidation and we'd potentially see this spike up, and it's the end. It's all over. The game is over. Bitcoin, cryptocurrencies, the cycle's done. It was early, and the left-hand translated cycle wins, right? But if we continue to see price stability for strong altcoins and Bitcoin around the current lows and the average true range drop off, it's likely, not guaranteed, but it's likely we'll start to see a breakout over the coming weeks or months, as we have already talked about many times, where we saw this signal and that told us that we're probably going to be under the all-time highs for longer than many anticipated. So if that is to occur, well then this beautiful stealth move plays out once again. Smash the like button if you got some value from that. Hit the subscribe if you're new here and you're still here at the end of this video. And for you guys, it's a quiet time. If you don't have enough exchanges set up, check out the links below for SwiftX for the Aussies and Bybit down below as well. The reason I say that is in the quiet times, the exchanges can get to your requests much, much quicker. And when the normies come back at the peaks of the market, they are all going to be trying to set up exchanges and everything is going to get overloaded. So you might be missing out on any of those DGEM plays that you want to get into. Use my links, don't use them, whatever you need to do. The main thing here is to go and set up exchanges so that you've got that accessibility ready for the normies to enter in the mania stage. Have a great day. I'll see you back here at the next video. If I don't see you over the weekend, have a good one and catch you real soon. Peace out.